Hello and welcome to the weekly outlook. Okay, we're going to start by recapping on last week's video, which was looking to sell the euro US dollar from the higher pullback of around about sort of 1.2. Now, as you can see, we did have a bit more further downside without the pullback last week, but after the data that was announced at the end of the week, and what we've started to see is a bit of profit taking in these short positions in the euro and in the US dollar longs, which has initiated this bit of a pullback at the moment. So we could be on our way. It's taken a long time, but we are looking for that better price to sell the euro. So that one's still in check and still looking to run its course. Now, in terms of data that we've got out this week, we've got Aussie dollar cash rate, which we're not really expecting that to change much. We've also got the BOJ outlook report as well on Tuesday. Then moving through to Wednesday, we've got the FOMC statement and federal funds rate. Now, we're not expecting any change from the Fed in this occasion coming up to the election. And the election really is going to be in focus. You've probably noticed that brokers are adjusting their spreads and their margins on the lead up to that. So we could see a fair bit of volatility in the US dollar over the coming couple of weeks. So how are we going to trade this? Well, we know that we've still got pressure in the euro, and we know that we've also still got pressure in the pound as well. The pound did have another bit of a sell-off last week, but again retraced towards the end with that US GDP, which coincidentally came in better than expected. But as I said, a bit of profit taking going on across the board, and it hasn't caused the US dollar to strengthen any further at the moment. So what we'd like to see is again that the pound, I'm looking for a much bigger pullback. I'm actually looking for a pullback to the 125 area before we sell that off. I'm hoping that we'll get that volatility over the next couple of weeks. But what I would like to say is just be cautious with this coming into this election, because the volatility can go either way, either strength or weakness in the US dollar, and it's going to be quite difficult to depict. So I would say after this week that it's probably best to sit on the sidelines and wait until after the election before jumping into any US dollar trades anyway. But one trade that has caught my eye and that I am interested in at the moment and taking for this week is the euro pound. Now, the euro pound at the moment is at 90 pence to the euro. So we're almost parity with the euro at the moment, which I feel is a little bit unjust in terms of the UK economy. Although that we've entered. We've obviously voted to leave the European Union. The data coming out of the UK has in fact been fairly good, and it is outdone analysts' estimates for what was going to happen when we left, or when we voted to leave the EU. So what we can expect is probably a little bit more weakness in the pound on the lead up to the submission of Article 50 next March. But in terms of the current price and where it is at the moment, I do feel that it's a little bit unjust on the pound, and the pound should be slightly stronger against the euro, maybe down to at 80 pence to the euro, or 85. So I think that we are in the process of, or nearing, a sell-off in this currency pair, and as you can see, we can have a fairly reasonable stop loss in terms of this area of consolidation here. Just above that is at 9152. We're just sat on the psychological number at the moment, which is at 9,000. So I would suggest taking a sell on market open on Monday morning, with a stop loss there at 9158, and looking to trade this down to 85. If we have a look at just some of the bigger time frames here, you can see where this sort of rejection has come in on the daily, and then it's had that 50% pullback of the rejection and then started to sell off, and you can see these long wicks on these candles here where it's pulled back, and this move here is in fact a 50% retracement or thereabouts a 38% retracement, sorry, of this move down. So it is just looking like a bit of a pullback before it takes a further sell. And you can see here we've got this area of confluence here, which is likely to be the first target around about 8.7, and the centering of that around about 8.5. So that's what I'm going to be looking at trading this next week. No particular data to instigate that trade. Looking at it more of a sort of trading out of the UK data that we had last week. We have got the MPC official bank rate votes and the MPC and the BOE inflation report coming out next week. Not expecting any change in that. But I think if we see all of the members of the MPC keeping sitting on the fence in terms of a rate hike or rate cut, then hopefully we should see the pound strengthen. Okay, that's it for now, and I hope you can make some pips. Cheers.